Morning, Wall Street winners. It is Tuesday, February the 11th. And as you can see in the US futures markets, all three of the US indices are down in the red. One interesting correlation I've noticed recently is when the NASDAQ is in the red, either at the start of the day or throughout the day, is down for the day. Oil, crude oil, and the oil refining companies that we follow, they tend to be up. So we'll see if that inverse correlation continues. But that's something I've been noticing in the market recently. If we turn to the news, the talk is again all about tariffs and tariff retaliation. We've got the conversation between Sam Altman of OpenAI and Elon Musk of many companies. Musk yesterday had put out an offer through his attorney and I guess through X in a way, or XAI, his new AI company, to buy Sam Altman's OpenAI as Altman is in the process of trying to convert that from a not-for-profit to a for-profit and then raise money and take it public. The offer was just under $100 billion. Altman turned it down on X through a tweet, and he responded by offering to buy X for just under $10 billion from Musk. So, interesting news there. Musk also said the other day that he is not interested in TikTok because he doesn't use TikTok and he wouldn't know what to do with TikTok. So it looks like Musk is not going to be buying TikTok. We've got crude oil futures up $1.29. So they're now in the 73.60 range, which puts them in the mid 70s. This is a commodity that has been down in the low 70s very recently and is now starting to climb back up. So I'm not sure whether it's the talk of tariffs that's causing this to go back up or other reasons around supply, which we haven't really heard a great deal about recently, but something is driving the price of crude up. We look further, we've got the VIX, which is up just above 16 at 16.18. It's been climbing up this morning, but it's in the we'll call it the comfortable range. I'd like to see it down in the 14, 15 range, but based on all the information and announcements and press conferences and new news that's been coming out and flooding the news media, I think that that's a pretty decent range. The Nasdaq is obviously off there, down 100 and almost 22 points. If we take a look through the list, before we get into the list today, I think today is going to be a day at the open to just sit and watch. I don't think it's going to be a time to be buying at the open today. It's going to be figuring out where the bottom is with these stocks and looking for opportunities where some stocks have dropped further than others, but may have earnings coming out. I think the other thing to take away today is not to chase earnings. And I'll give you an example of that in just a second. Hey, if you're liking these videos, please hit the like and subscribe button. You'll get one every day. We follow the market, talk about the narrative. So looking through our list of health and retail, we've got Costco having a great run. This stock was down in the low 900s less than a month ago. It's now almost at 1100. I mean, it's halfway there. Well, it's more than halfway there, but it looks like it's going to get to 1100 by earnings because Costco doesn't announce their earnings until the first week of March. Now, that's going to be interesting because that would be a very tariff dependent stock. Lulu, less so, based on an interview with the CEO, where only 3% of their goods that they sell come out of China. So they'll be less affected. Walmart, very affected by trade wars and tariffs on China and other countries, and yet they're near a record high for the year at around 103. Then you've got Couche-Tard, Canadian company, was looking to buy 7-Eleven. That bid offer got rejected. They're down in the low 70s. I think that's an interesting long-term play in Couche-Tard. Home Depot, waiting on results for Home Depot. If you believe that Home Depot and home improvement sales over the Christmas quarter and then future forecasts going into the spring, which I believe will be strong based on people maybe staying in their homes and doing improvements as opposed to buying new homes based on mortgage rates being where they are and not having come down as far yet as they need to. I think Home Depot is going to be set to do very well. And this is a stock that has struggled over the last year. Then we've got healthcare, and healthcare is basically been in the red, but looks like Humana is up significantly this morning. And they did have or do have earnings. I'm not sure whether it was in the morning or the afternoon, but they beat on Q4 sales targets and guide strong for the full year ahead. So that seems to be very positive for Humana, and they are up in the morning session 4.2%. So, but that's a stock that was at 450 a year ago. So although it's a bump for where they were yesterday, it still needs, it's got a long way to go to get back to where it was in the last year. Then we get down to transport, and if retail gets hit, transport's going to get hit. So these stocks have JB Hunt has gone from a $186 stock down to a $67 stock. I think it's got further to fall. Have to say the same about CNR. Unfortunately, I think it's going to fall further into the 140s, low 140s. It'll be attractive at that point, and I think in the low 160s, JB Hunt's a pretty attractive long-term purchase. Then we get into oil, and oil is pretty much green across the screen, both yesterday, oddly, and today, with maybe based on crude, maybe based on incoming tariffs on oil and natural gas. And then we get into tech, and tech had a good day yesterday, but it's pulling back today. One of the new names added to my list is Uber. Texas Instruments, if it drops into the high 170s, that's one that I've been dabbling in and then getting out of in the same day, and just taking a small 1.5 or 1% gain. Applied Materials is going to announce earnings in 2 days on Thursday. This is one I'm keeping my eye on. It had a great day yesterday, kind of has a ceiling in this 183, 184 range. It has hit 185, but usually 183, 184, and then it comes back, drops into the sometimes high, sometimes mid 170s. We'll see what it does today. If it drops into the mid 170s today, I think Applied Materials is an interesting acquisition to hold through to earnings. Now, I did say I was going to come back and talk about don't chase earnings right now because they can burn you, and I'll talk about that in just a second. Nvidia is another one, and NVDL, obviously the ETF that follows that on the on a 2-to-1 basis. I think NVIDIA's still got a ton of room to run. It's a stock that has the significant market share in AI and the chips behind it. And they've got a great story, not just with the hardware, but the software. They've got some phenomenal leadership, phenomenal teams inside the company to help operate it. They operate efficiently. I think that this is a buying opportunity right now, even at its current price for NVIDIA. I think it's going to continue to go up. And if it doesn't go up 25% this year, I would be very, very surprised. I think it will go up more than that. I also think Micron, which announces later in the quarter in March, is a very, very good buy right now in the low 90s. So if it comes down the 150 today that it's set to at open, that's one that if you're looking for a tech company to get into, hold for a little while, although it is a risky time to hold with everything going on and press conferences and announcements that just come out of thin air, and then some things that come out of thin air and get canceled again in a day or two. It can be a turbulent time, but if you're willing to persist, I think you'll do well in Micron, especially getting in at an entry point in the low 90s. CrowdStrike and it has earnings as well. CrowdStrike, sorry, yeah, CrowdStrike has earnings in March. Okay, I thought it was sooner. My apologies. That one has had a huge lift from the 300s up to 428 in the cybersecurity field, similar to Nat, which exploded upwards on earnings this quarter and is now at 172. This was a $90 stock a year ago. So this stock has really made some moves. Pan W was what I was thinking of. Pan W announces this week, 2 days, Thursday as well. And I think they're set for some good news. I'm not sure it's going to be as positive as Nat because there's more hardware involved here, and hardware has potential for tariffs, and that is cautionary. So they may guide. The guidance is what you're looking for in the earnings right now. You need to have good earnings, good revenue, and really positive forward guidance, which is something that's hard to come out and say with conviction in a time with so much turbulence. Apple's been coming down. Palantir's just been continuing to rocket upwards. It's just the fan favorite for American AI right now. So hard to fight that wave. CRM has pulled back. I think CRM is a buy for the long term right now in the 320s. The stock dropped as low as 320 the other day, and now recovered up to 330 yesterday, settled at 327. It was a $350 stock a couple of weeks ago. Not a lot has changed other than they've announced layoffs, which should benefit the company in the long term by reducing expenses. So I think there's an interesting opportunity there. As we get down further, what I wanted to talk about in terms of earnings and not chasing earnings was Shopify, shop.to. So I have the shop.to, which doesn't have pre-market numbers. Shopwood in the US. This stock was down when I looked last 7% in the US market, which is about 14 bucks. Um, and on amazing numbers. So if we take a look at the news here, you can see that they topped estimates, but the stock falls on outlook. So that's the key, is the outlook. So revenue surges 31.3%. They're talking about 20% year over year, or yeah, year on year growth this year. But that wasn't enough to satisfy analysts in the market, and they've sent the stock down in the pre-market. So be careful, if even if you know that the earnings are, or have hypothesized the earnings are going to be very good and revenue is good, you need to be very confident around earnings that the story is going to be strong. And that's where you can really see the difference between like a Meta in tech, which came out and rocketed upwards, and an Amazon and a Google and a Microsoft, which came out with fairly decent earnings, but ended up going down on the earnings announcement. So that's where we are today. I would be looking for opportunities. AVGO is another one. It hit 235. I think that's pretty high. It should come back to the low 230s, maybe even into the 220s today. I'd be keeping an eye on that one. Tesla, if you're looking to short something, that would be one I would consider shorting right now, or buying a put on going forward at a lower price, because I do think it's going to continue to have some bad news and go down. We saw On Semi, which does a lot of chips for the car manufacturing sector or automotive sector, and they got slammed yesterday on earnings. And that is one of the suppliers to many of these auto producers. So if they're not seeing a good future forecast and had a bad quarter, it's kind of a predictor of things to come. We're also seeing a ton of used cars on the market right now and having a hard time selling cars at current interest rates in the US. So lots of things to weigh into your purchase decision. But if you focus on buying good companies that have good profits and revenues and have strong cash flow, the economic cycle will turn around and those companies will continue to move upwards. Twilio also announced this week. They announced in 2 days. So that'll be one to keep an eye on. And then financials. I thought financials were going to have a bit of a gloomy day yesterday, and they did. So for most part, they were in the red, with the exception of TD, because of the announcement that they're divesting of Charles Schwab, which I think is one of the worst moves for them right now. They need to be more aggressive and more on the offensive, not on the defensive. But they're a Canadian company, and Canadians sadly tend to play very defensive. So that's where we are today on the 11th. Good luck with your trades, and if you're liking the videos, please hit the like.